So first of all, what do you need to know for the week ahead? We've seen quite a significant breakout on gold last week, again breaking out to 6-year highs, tapping 1,450 US dollars per ounce. In fact, last week we discussed with you in detail where we were looking at the range and major support to be coming in around that 1,400 US dollar per ounce level. We tapped that level spot on. We then springboarded higher, so I hope a lot of you capitalized on that breakout last week. In fact, we banked 500 points on that breakout position between the early part of the week where we saw that US dollar strength come in, giving an opportunity to get back into gold at the lower end of the range, then breaking out towards those 6-year highs. Not only gold, in fact, we also saw a significant move on platinum, breaking out to 2-month highs, breaking out to 865 US dollars per ounce, and silver last week having its best week in over 3 years, up 8% just last week. So we saw a significant gain on the precious metals. But what do you need to know for this week? So essentially, as we get towards next week, we have on Wednesday, the 31st of July, the FOMC statement. The Federal Reserve are anticipated to cut rates by 0.25%, but there is some expectation that we might even see a deeper rate cut on that of 0.5%. In fact, the Fed, John Williams, last week, he alluded to a deeper rate cut, and we saw the dollar break down to 2-week lows, and as a result, gold broke out all the way up to 6-year high. So you really want to keep an eye on that. Next week on Wednesday, we have the FOMC statement. That will be a major catalyst potentially for the precious metals. That is on a lot of traders' calendars at the moment. So bear that in mind. Also in the latest week, hedge funds and money managers, they've increased their net long positions significantly again in the latest week. So be very careful here. A lot of technical traders last week were looking for a triple top in gold. They were again caught on the wrong side of the positioning. We mentioned last week you want to look for buying evidence at 1,400. We were looking to buy. In fact, we bought in at that level, capitalizing on the 500-point breakout. You want to be careful again this week. We are looking at a range this week of support to come in again between that 1,400 to 1,415 level. Right now, gold is trading at 1,422 US dollars per ounce, around that zone. So we are looking for support again around 1,400 to 1,415, and then around that level, if we do see a retracement to those zones, we'll look for buying evidence with a view to take the price back towards the swing highs again. Bear in mind that we've got the European Central Bank announcement on Thursday, Mario Draghi's speech later on in the afternoon, and then next week we also have the FOMC statement. So we want to watch what the overall narratives are from those central banks. So definitely have both of those events in the diary. So with that, quick summary for you as we go into next week's trading. Also a question from Rupert as well. Rupert was asking the best way really to trade gold at the moment. I would suggest certainly for this week, we've got the potential for range-bound trade. So again, I'm looking at resistance around the swing highs around 1447 to 1450. I'm looking for buying again to come in between that 1400 to 1415 zone. We may not get as low as that. We might just simply tap, for example, 1,410, then springboard higher back towards the swing highs. But that's what I'm looking for at the moment. But again, be very careful of looking for that evidence of buyers coming in. If you are looking to establish an additional position on gold or new positions on that, you don't want to catch a falling knife. If, for example, the dollar was to have a significant breakout to the upside, you want to be careful. You want to look out for that evidence of buying coming in. So going back to Rupert, your question, we're looking for range-bound trade this week, but be mindful, Thursday, European Central Bank announcement. Next week on Wednesday, we have the FOMC statement. Hedge funds and money managers, in the latest week, they have again significantly increased their overall net longs. We've continued to see that trend since the end of May, beginning of June, since gold has been breaking out to these levels, 6-year highs. And we keep seeing retail traders getting on the wrong side of these trades, trying to pick the highs, whereas the funds keep accumulating net longs. So with that, that's been Gold Asset of the Day. I wish you good trading, and we'll catch you back here next week for Gold Asset of the Day.